Welcome to the weekly update, where I'll be going over the action in the markets ending on February 25th, and then we'll see how things look for the week of February 28th through March 4th. And if you follow the markets with any regularity, it was pretty much a roller coaster ride. We saw a lot of negativity earlier in the week, and it looked like we're going down, down, down. And then Thursday, buyers started to enter the market, and we saw a big bounce on Thursday and then another one on Friday. A lot of this is being attributed to the current geopolitical events, basically what's going on between Russia and Ukraine and what's happening or not happening, information that we do have or information that we don't have. There's just not a lot known right now. But this seems to be one of those things where historically what has happened is you sell the rumor and then buy the news. And that happens quite a bit with individual stocks, especially when earnings come out or with an economic report. Well, we look back through time, and as countries are getting ready for some kind of conflict, you might see the markets really decline. And then, believe it or not, when the conflict actually starts, we see prices go back up. So that might be what's happening now, because when I'm recording this, things just started. We don't know. Is this going to be quick? Is this going to last for a long time? Is it going to advance? We don't really know. So we just have to look at the charts in front of us and make our decisions based on that, trying to leave emotion out of it as much as possible. So let's look at the week's session that we just finished with. For the week, we had a pretty flat open from the previous Friday's close until Monday's open. There wasn't a big gap, which is kind of strange because when you have a weekend, a lot of different things can happen, and you might see a significant change from Friday's close to Monday's open. Well, we didn't see that this week. Despite all the roller coaster action that occurred, we were up 0.82% for the week. So the S&P was able to get back into positive territory and actually show a gain. What's really potentially impressive is from the low that we hit on Thursday, which was right at the open, until the close on Friday, we had a 6.5% rebound. That's pretty big. Really, really big. Now, if you are an absolute genius at picking bottoms and getting out at the right time, you would have had a very good week. Well, most of us don't do things like that. So to mention this is not necessarily all that relevant, but at the same time, it just shows you how powerful things can become just over a few days. But the S&P itself continues to be range bound. And as I go through some of the charts, they're really more noticeable on the daily charts. And if you're finding this video useful by the time you get through, I do post videos every day. And I go over the action, and then every week I post a chart. I post a video, and then my goal is at the end of the month, which is after Monday, to have a monthly video just looking at really longer term charts, mostly monthly charts, and then do another video based on economic reports that have come out during the past week. I don't know if I'll be able to get to that or not, but those are my intentions, and usually something that I've been able to do. Getting back to the market action, for the week, volume was above average, but less than the previous week. We saw a couple of days in this past week that had below average volume because there's a lot of uncertainty right now. You have people just waiting to see what will or won't happen. What the markets are fixated on now is we still have a fairly negative technical picture. Now, longer term, it's still positive, but we're in danger of losing that. We need to see, if you're bullish, buying continue throughout this coming week if we're going to recapture a more positive technical view of things. If prices go sideways, if they continue their decline, we're going to shift over more towards a negative stance. But longer term, we are still okay, but it is a weakening picture. Of course, we're in the middle of earnings season. We're kind of getting towards the end part of that. A lot of people are really focused on inflation and interest rates right now. And of course, a lot of the geopolitical concerns that are happening. As far as our trend, the ADX on a weekly chart is showing that we are in a trend, and that trend is negative. So here's a 10-minute bar chart of what happened from, we had a shortened week because of President's Day on Monday. So here is the open on Tuesday, and there really wasn't all that significant of a change, especially after a 3-day weekend. We saw some initial strength come in, but then selling. But one thing that was a little more encouraging is as we got closer to the close, we did see a rebound off of the lows on Tuesday. Wednesday, this turned out to be probably the most negative day of the week, where we saw some initial selling. We tried to come back up. We hit overhead resistance and then fell down and closed at the low. That was when people were freaking out the most about what's going on between Russia and Ukraine. During the night between Wednesday and Thursday, the futures were strongly negative. But then as we got closer to the open, they rebounded a little bit and we did gap lower. Well, what often happens is with this gap lower, we saw buyers enter in, and then later in the day, they were able to close this gap and then even break above that on an increase in volume. So that is seen as positive. And then that took us into the close on Thursday. Then on Friday, we did gap higher a little bit, and I was just kind of looking at this saying, okay, we're going to sell into strength like has been the trend lately. Well, we came back down to the unchanged level, and then we're able to see a lot of buying. There was not an awful lot of selling, so prices drifted sideways, and we ended up closing at the high for the day. So Thursday and Friday are in the books as being a really strong rebound. Now, is this a change in trend, or is this a relief rally? That's the question that we're trying to answer right now. At this point, my personal opinion based on the charts is that this is a relief rally. It could turn into a reversal, and there are some things way in the background that are more positive for the market, but the market has a lot of headwinds that it's fighting against too. Inflation is really increasing. We have the Fed will be meeting here in a few weeks. There are economic reports that are coming out. We've been in a bull market for a long time and may be due for some kind of a reversal. But right now, we are just experiencing a correction. We briefly went into, we're just experiencing a pullback. We did go into correction territory, but because of the bounce back on Thursday and Friday, this is just a decline in prices, a pullback. So that's where we're at right now. As far as sentiment, this came out on Thursday. This is the American Association of Individual Investors. And I brought this up in the daily video, but because this comes out once a week, I like to go over it in the weekly video. We are showing extreme pessimism right now as far as individual investors are concerned, and they tend to be wrong. They tend to base things more on emotion, and they tend to react to things. And believe it or not, everybody listening to this video, they're talking about us. We are individual investors. So since the crowd as a whole tends to make wrong decisions at the wrong times, we use this as a contrary indicator. And after Thursday, with things being very negative, that could be positive for the market. And you can look back at other times. Sometimes it didn't really mark a bottom. Other times it did a really good job. Other times there was a bit of a lag between the two. Looking at the VIX, this is the fear gauge, and on the top, I have the closing basis. And for the week, it was pretty much flat. And that was another thing. As earlier in the week, prices were going down, we saw the VIX really start to climb. Thursday and Friday, as buyers came into the market, we saw fear really decrease, and we ended up closing at the low based on the bar for that week. So that could be seen as positive as fear is diminishing. Then another thing that came out this week that I covered in the daily video, but again, this is longer term, is this blue line on the top. This is consumer sentiment. This is how are people feeling about things. When this blue line is going up, they're happy. When this blue line is going down, they're unhappy. Well, pretty much for all the last few months anyway, we have seen a real decrease in consumer confidence. At the same time, this red line is the 2-year Treasury yield, and we can make some comparisons between the two. A lot of times when they're both going up together, that's a more positive environment. When they're both going down together, that's a more negative environment. Right now, they're going in opposite directions of each other. So we're just going to have to watch this. This might be one of those times where something different happens than what has happened over the last few years, because we're seeing a real increase in inflation, but not, in fact, we're seeing a decline in consumer sentiment right now. As far as our breadth for the week, we had a pretty powerful up week based on price and volume. The longer term line here is just showing that, yeah, it's decreasing a bit, but we're still above the red moving average. We're seeing a bit of a negative divergence. And a lot of this can go back to 2021, because as the S&P was charging higher, it was not very many stocks, the big tech names, the FANG stocks, that were really responsible for a lot of the gains throughout 2021. Well, those stocks are hitting problems right now, but that means that there were fewer stocks actually participating in pushing prices higher. And so we are seeing a negative divergence here. We'll have to see how this plays out. This is just a warning flag right now. We have to go with price, but we pay close attention to volume as well. Then our advanced decline ratio actually went up a little bit in the past week from the previous week. The blue and the red line are both above 0, and they're going higher. So that is positive. New highs and new lows. We did see some new highs being generated this past week. We saw an awful lot of new lows too, but it's not really being picked up by this chart. Overall, though, we are seeing a decline in the new highs. So that's also suggesting some internal weakness within the S&P. Our accumulation distribution is also, and this is kind of hard to see here, with the negative action, we are just crossing below this moving average. That's also something of a warning sign that we need to pay attention to. As far as our trend, we are in a trend. The ADX is above 20 and climbing. The red line is on top, and we're above this other moving average that I have plotted here. So if the market is in a trend, then that trend will be to the downside. If we bounce up out of this, if we go sideways, look for the ADX to weaken. But right now, it's just showing that we are in a trend, and that trend is negative. Then on the daily chart, we're still waiting to see how this will play out, but we had a mass index trigger. When this goes above 27, that's trigger number 1. When it goes below and back down to 26.5, that's trigger or signal number 2. That's happened on the daily chart. It has not happened yet on the weekly chart. Then this is another chart that I'm introducing in the daily videos, and I wanted to include the weekly version as well. This is called the Arun, and it's kind of a crazy EKG, funky looking chart here, but really, if you kind of break this down a little bit, it's not as confusing or as scary or as irrelevant as it may appear. When the green line is going up, and especially when it's pegged near the top, that means buyers are in control. When the red line shoots up and it's pegged near the top, that means that sellers are in control. A positive environment, when you're bullish, is when the green is up near the top and the red is near the bottom. Right now, we have the green is declining and the red is pegged near the top. That means that sellers are still winning right now. And then down below, we just have the difference between the two. This is an oscillator. When it's pegged near the top, that's positive. When it's going down, that is negative. So this is still suggesting that there's an improvement in things, but that the sellers are still in control. We want to see some more follow through buying for this to look more positive. Some of our longer term charts, first to look at the pivot points, and they're going to be redrawn as we kick into March here. We only have one trading day left in February, but we've been hitting some overhead resistance from the previous month. And we're right at about the pivot for the weekly prices right now. So you can't say much more than that. A lot of the program trading out there and the algorithms and such that are used for these things, they figure all this stuff into their trading rules. And when we come right back to a pivot, because if you're above the pivot, that's positive. If we're below the pivot, that's negative. Well, when you're right at the pivot, that means the battle hasn't been decided one way or the other. So we're kind of more back to neutral as far as the pivots are concerned. When I was talking about volume, yeah, we had above average volume, but it has really trailed off the last few weeks. Then looking at a longer term chart of the S&P, this is what I talk about when I say that we still, and this is a daily chart, when the long-term trend is still positive. This red line is still going up, but we have dropped slightly below the 200-day moving average. So that's what I say when it could be weakening. The longer that we spend below this red line, the more chance it will have of actually rolling over. Also, then looking at a monthly chart of the S&P, we are right down to the moving average. And I have a 12-period moving average here because there are 12 months in a year. So we're right down here. We're at potential support longer term. And then weekly, I meant to do the weekly chart first, but they got in the wrong order. We're also right at the moving average. And I have a 50-period moving average plotted right here. So we're right at potential support. We're right at that point where if things are going to turn back more positive, this would be a good place to launch from. If things are going to become more negative, we're going to see prices break down below these moving averages. Here's another one of the weekly chart, which just shows a 13-period moving average. That's the blue one. And a 50-period moving average. That's the red one, where the trend is still positive, but weakening. And we are right at the bottom of this moving average right now. So if the market is going to take a stand and say, no, we see more positive things than negative things right now, this is a good place for it to happen. If it doesn't happen, then things could turn decidedly negative. Here are the weekly bullish percent index signals. And with the down days, even when we had the down day, there were a lot of, the up day that really rebounded. There were a lot of new bullish percent index sell signals generated, and we're in danger of dropping below 30 if we continue lower. But if we see a lot of new buy signals, this could turn around and head in the other direction. One of the oscillators that can be helpful is the Chaikin oscillator, where we are coming off an extreme negative reading on a weekly chart. So that might give more reason for things to bounce. Here's a longer term view of that chart, and going back and seeing when we've hit these extreme spots before, a lot of times that did mark a significant bottom in the market. Now, another way to rain on this parade is we did not have as negative a signal as we've had at significant lows in the past. So you can take this as a good support level that we can bounce up from, or I don't really trust this much because it's not as extreme as other times. Checking money flow on a weekly basis, it's positive, but it's showed a little bit of strength in the past week, but is weakening overall. The force index is still negative, but showing some signs of improvement. We still are below zero and it is red. The McClellan oscillator, based on a weekly chart, it is showing some improvement, but we continue to be below zero. Then that feeds into the summation index, where whenever you have a negative day in the McClellan oscillator, that feeds over into this indicator. We are still showing a decline based on price and volume. All of these momentum oscillators are negative. And as I've explained a little bit before in the weekly charts, they can't help but show a negative divergence, meaning that as price was going up, we saw these trailing off. That's because they're calculated the way they are. As we're going up, you're having higher and higher prices to look back into the calculation. And so this can't help but show weakness. So that's why I'm suspicious of using these kinds of oscillators on longer term charts, because some of the doom and gloomers, they're looking at this going, yeah, the world's going to end. Look at this terrible negative divergence here. Well, if you dig a little deeper and look at the logic behind this, as we're going up, the calculations are different. And so they do roll over almost automatically. That's where I come out. So I look at these, but I don't base everything on these. Then one of the PMO studies, it on a weekly basis is still showing that we are in negative, and we're negative based on price, but we saw a little bit of an advance this past week, and based on volume, we're showing a bit of an improvement. Another PMO study, just looking at those that have a rising PMO, the stocks inside the S&P 500, yeah, they're rising on a weekly basis overall. That's pretty positive. But if we look at the buy signals, they are declining. And if we look at those PMOs that are either above or below zero, well, the ones that are above zero continues to decline. So we're seeing a little bit of a mixed picture with this study. RSI, which a lot of people use, it turned up this past week, but is really not, it's below 50, so that's negative, but it is showing some improvement. It's not one of my favorite indicators, but a lot of people rely on it heavily. A longer term oscillator that can sometimes be helpful is the special K, just like the breakfast. We are showing it going a bit flat right now as prices decline, but we're above this moving average overall, so the long-term trend is still there. Our Stoke RSI, which is a little more sensitive to things, it has been pegged negative for pretty much all of 2022 so far. These things really move, and since we've been bouncing around like bumper cars with an overall downtrend, it's staying down in the extreme negative area. Then the STO, Swinland Trading Oscillator, it is negative based on price and volume. So those two strong days, as impressive as they are, we need to see follow through on that, or we're going to lose that advantage that was given. Or if we really start to break down and go back down through support, things are going to switch more negative. Then the Williams %R, it's bouncing up after giving an extreme negative reading, and it's still below 50, but is showing some improvement. The Vortex, sellers are still in control because the red line is above the green line, and the red line is advancing while the green line is declining. The Ulcer Index, this is more of a sentiment gauge where as markets decline, the stress or the chance of giving yourself an ulcer increases. And this is what we saw during the whole COVID plunge. People were just freaking out massively. Well, we've been under this for most of the time since the COVID plunge up until the beginning of 2022, and this is rising. It could go a lot higher than it is now, or it could start to decline if we see follow through buying. Money flow index is getting very close to an extreme negative reading. Some of our different charts for the week, the Heiken Ashi, it had a dark candle overall, but we closed in about the middle according to this calculation. The Kegi remains negative because it's red, but didn't really see a big change. The Renko overall is still negative. It has a red box for the week. The equi volume is showing that even though we closed up, we have a green candle, but we really set a new low earlier in the week. And the ease of movement is showing a decline based on 1 period, and then based on 14 periods, it's also declining. It's a little more negative on the point and figure chart when you switch looking at a weekly view. It's more positive on a daily basis. It's looking at a pole reversal with more X's in here, green X's. On the weekly chart, we're seeing red zeros. And we might be looking at a double bottom breakdown is what this is calculating right now. 3-line break is also showing some continued weakness from the previous week. Some of our different trading systems, the Elder system, which is more sensitive, but this is a weekly chart, it is back to neutral and above the 65 period moving average. Our SAR, stop and reversal, when the dots are above, that's negative. Even with the bounce back that we saw, it hasn't changed the indicators on this chart. Some of the broad market things that we look at, here's the S&P on the top, where what might have happened is we had some pretty strong support right in here. Well, when we gapped lower, that probably triggered a whole lot of stop loss orders. And once those were all cleared out, then everybody that, like floor traders and people that really study this stuff and really understand the markets, once those were all cleared out, that got the amateurs out of the way, and then they came in and started buying. So that's where we saw a real recovery for the week. The mid caps, they went down to support and then were able to bounce up from that, but we're now back in a weekly range. On the daily charts, we're in a range there too. Same thing for the small caps. We found support, bounced up, but we are in a weekly range, and we've been in a pronounced daily range for quite some time. Looking at the all stocks, these are international stocks, US stocks, kind of jumbled all together, where the trend is still positive, but weakening. The blue line is starting to come down, and even with the recovery, we are still below the longer term moving average. So this is looking more negative, where you need to see follow through buying for this to turn back more positive. Mid caps, pretty much range bound, where they've been for a lot of 2021. We're now back up into the lower part of this range that they've been in for the last year or so. And a similar story can be said for the small caps, just kind of bouncing around, not really doing much. We did see a crossover with the moving averages, so that's more negative. The Dow, it is also kind of near the lower end of the range that it's been in for a number of weeks, and we're seeing a potential of the moving average crossover. NASDAQ, it is starting to cross over negative, and it has more of a pronounced downtrend. It's been showing a lot more weakness on this move down, but then when we have a good day, it can also show a real strong move up. NASDAQ 100, these are the 100 biggest stocks in the NASDAQ. We're below the moving average. The blue line is rolling over a bit. We need to recapture this 50 period moving average for things to look better. And then just making note of this, see how volume has also been trailing off. Still above average, but it's been lower than what it has been recently. NYSE, this is a really broad-based measurement where we're back up into this more sideways range that we've been seeing lately. Wilshire, also a very broad-based index. We're now below the moving averages, even though we had a nice recovery with the blue moving average in danger of crossing over rather soon. The FANG stocks, yeah, they ended up being down 1% on the week. They did see a real nice recovery on Thursday, but that didn't really follow through till Friday. They were up, but not up that strong. It's like Thursday was a growth rebound and Friday seemed to be more of a value rebound. Well, we're seeing the crossover here with the FANG stocks overall. ARK, which has just been getting hammered here. Well, for the week, Kathy was up 4.66%, but still in a longer term massive downtrend with the blue line below the red line. Other things that we look at, here's the CRB index. I use this a lot to gauge inflation because these are the raw materials and things that are used to make the products that we consume. And if those prices go up, that means our prices are going to go up eventually too. Well, it's still in a really strong uptrend, both on the daily chart and here on the weekly chart. It kind of flattened out a little bit weekly, but still is in a strong uptrend. Gold, which just was all over the place this past week with the fear on Thursday, it really spiked up, then spent the rest of the day being sold. This is kind of what I'm watching for. If you base things on a trend basis, if we can get back to these highs set back in 2020 or so and break above that, that'll look more positive. Well, if you buy gold just because it'll always have value and you see real intrinsic wisdom in doing that, you probably want gold prices to fall because then you get it at a cheaper price and you don't care really if it goes up or not. You just want to have the physical gold. Well, on the week, it looked like we were really breaking out, but then spent most of the rest of the week declining, especially on Thursday. Oil went up above $100 a barrel there for a while on Thursday, but then dropped back down. It's still astronomically high, but is at 91.59 and ended up being up 1.53% on the week. This is the same chart that I show pretty much every day in the daily video, but I keep a close eye on the US dollar index. And overall, on a longer term chart, this is still looking positive. We're well above 96 right now. In fact, we're at 96. Was that 82 or 62? It's hard to see. Anyway, some relative studies so we can compare different markets and do some intermarket analysis. This is looking at stocks versus bonds and this is a monthly chart. So when I do the monthly video, expect to see this again, but it can still be helpful to look at this on the weekly videos where stocks continue to outperform bonds. And that trend is still in place, even though we're chopping around slightly. Then looking at gold versus the dollar, we saw gold decline a little bit. So the dollar is still holding up fairly well against gold. If gold is really going to take off, as I mentioned in last week's video, first we want to get above this red line, and then we eventually want to get above this blue line for it to really show some follow through strength. If you look at gold on a trend type basis. Then gold versus the S&P, this is what I was talking about. I look at a daily chart with the daily videos. Here is a weekly chart where it declined a bit for the week, but we're still showing a potential breakout when compared to the S&P 500. Then looking at the value versus growth interplay that's going back and forth. When this chart is going down, that means value is winning. When this chart is going up, that means growth is winning. Well, we saw a little blip up for the week, but overall value has really been outperforming growth, especially since the beginning of the year. Here's another one that shows the NASDAQ 100 against the S&P 500. The NASDAQ 100, that's a lot of tech stocks. In a growth environment, you would expect to see this really increase. And it blipped up a little bit, but it wasn't all that strong. And we are below the moving average. Looking at the top 100 stocks in the S&P 500, you can take this as negative or positive. If you're more of a growth investor, this is more negative because the 100 stocks, which are largely tech stocks, they're underperforming the rest of the S&P. Well, if you're more of a value player and you're getting into value stocks, this is more positive because now we're seeing more of a broad base of action with more of the stocks in the S&P 500 participating in the movement that's taking place. Then some other things to compare staples with discretionary. This top chart is the S&P 500 overall. You can see how we're dropping down here a little bit here. And then this is a ratio of staples to discretionary, where staples have just been in kind of a really long-term downtrend, a few blips up here and there, but overall in a real downtrend. Well, lately what we've been seeing is staples is trying to stage a bit of a bounce. And well, that's the battle that seems to be going on every day, growth versus value. Well, staples versus discretionary can be a good way to watch that battle be played out. So what are we looking for this following week? The long-term bias remains positive, but it is showing weakness. And I feel like a broken record saying that, but looking at these charts, you really can't conclude much else. Things are still in some avenues looking positive. In other ways, we're looking more negative. And we're kind of right at the point where we started, and we're right at that pivot level. So the battle has yet to be determined. And so we're asking the question for this past week, what we saw later in the week, was that a relief rally or a reversal? So we're going to be watching for either follow through buying to see if things are reversing, or if there's continued weakness, then the relief rally may have come to an end. There are some economic reports that are being released this upcoming week. On Tuesday, we have the ISM manufacturing. Then on Thursday, we have the ISM non-manufacturing. Those are kind of the two biggies. But the biggest report of the month is coming out on Friday, March 4th, and at 8:30 a.m. will be the employment situation report. This is when we get the unemployment rate, average hours worked, cost, a whole lot of stuff. It's probably the most important economic report of the month. And then, of course, all the geopolitical developments, the things going on in Canada, the things going on in other parts of the world. But really what people are focused on is what is going on between Russia and Ukraine right now. And depending on how those things play out, they might have some impact on price movement. So thank you very much. I hope you found this video helpful. If there's other things that you ever want me to include, there are other charts that I will be introducing. This is only the second weekly video that I posted now for a while, and I'm revamping everything. And so some of the things that I will be including down the road, I haven't really been able to develop those yet. But if there are things that you find interesting as they apply to the S&P 500, please let me know about that. So I hope you have a wonderful week. Please check out the daily videos and see if those are helpful to you. And I will talk to you at the end of this coming week.